Okay, so moving forward with this event, next in line we have an expert to discuss about data management risk, using data safely to drive value. He's the head of data management risk of Standard Chartered, Vijay Jiraj. Vijay, over to you.
Thank you very much. And good morning, good afternoon, folks, depending on where you are. Thank you for joining this session. So bear with me for a couple of seconds while I share my screen. So yes, I'm with Standard Chartered, and I lead the team in compliance that sets the policies and standards for the responsible use of artificial intelligence. And I also look at data ethics. Let's jump right in with a fun fact that I made up this morning. Which do you think is the most frequently used four-letter word in the English language? Have a think, and I'm sure you're all thinking about the most commonly used words, but it's not what you think. It is actually data. If you look at RegTech 3, if you look at LinkedIn, if you look at social media, news, movies, whatever, it's all about data. Data is actually the most commonly used four-letter word in the English language. I know all of you were thinking of a different word, risk, probably, but it's data. So we can use data to derive value, and the topic today is data management risks, using data safely to derive value. Quite a bit to unpack there, and let us break it down into the component parts to see what each part means. In terms of deriving value, as most of us in various organizations are well on the journey to be what we call data-driven organizations, we appreciate a lot about deriving value, but I think we are just at the tip of the iceberg. Couple of examples that I want to call out. One is about detecting greenwashing in ESG reports of companies with greater focus on climate change, with greater focus on social and governance aspects of companies, corporate social responsibility, as it used to be called previously. More and more companies are starting to publish where they are on the ESG journey as part of their annual reports. So some of the companies have separate ESG annexures or ESG reports that they publish. And given the multiplicity of standards in the ESG space, it is difficult to compare companies and say with confidence that this company is doing better than another company. Plus, there is also the risk that given the factors, especially around the multiplicity of standards, that some of the companies, a few of them, may be overstating their ESG credentials. And that is where the use of additional sources of data as well as AI techniques comes into play. So you could start looking at multiple alternative sources of data from companies, like their social media posts, like news reports on various initiatives the companies are running, even employee chatter on forums and websites. You can use AI to categorize, classify, tag, and aggregate that data, and human oversight to compare the results with whatever the company is stating in their ESG reports, which are usually self-attested. And with that, you may potentially be able to identify any greenwashing where companies are overstating their ESG credentials. So that is one area. It's a new area, and you're looking at using additional data to manage your risks. Another emerging area is the use of what we call alternative data for credit decisioning. So historically, when you applied for a loan or a credit card, you gave your application which had demographic details like your age, income, and so on. And the bank or the financial institution, they got additional data from the credit bureaus where your credit history was available. But if you're, say, a fresh graduate who's just entered the workforce, you may not have that kind of credit history and you may not get credit. So to avoid that, banks are looking at alternative sources of data, like the way you've paid your telco bills, the way you've paid your utility bills, your rental, looking at your social media feeds, and trying to build a broader and a more uh, richer profile of you to analyze creditworthiness. So, in terms of deriving value from data, you're going to see more and more data sets, and I'm talking of breadth here, more columns, more tables, to use a crude example. You're going to see more rows, and you're going to use these to solve new problems, to improve your risk management processes, to better analyze risk. The example we saw with ESG, to offer new products and services, to target new sets of customers. So you're going to use data actually to drive value, to derive value as well. But having said that, the power that data gives you also means that it's got some risks associated with it. Things can go wrong, and we need to use data safely. As the great optimist Murphy once said, if anything can go wrong, it will. And this is a law that I have tested many times in my life, and this law has never gone wrong. So we have had quite a few examples in all our careers, I'm sure. So in order to use data safely, we need to understand the risks associated with data, the drivers behind those risks, and then see how we can manage those. So let's quickly look at what can go wrong, what the risks are. If you're using personal data, it is possible that you sometimes inadvertently use data without consent for the specific purpose from the customer or the data subject. It could be, as an example, patient confidentiality. You may have medical history and it inadvertently leaks into a marketing campaign and you're breaching patient confidentiality laws. Similarly, you could be violating banking secrecy or data privacy laws and you don't want to go there. So data privacy is a source of risk that you need to manage. Data access and security, another source of risk. It could be external hacks and your data ends up on the internet, your customer information, their credit card information, medical history, whatever. Or it could be an internal problem where, for example, your traders suddenly have access to salary data of everybody because permissions were not given appropriately. So managing data access and security, including cross-border access, is another area of risk. Data quality, I don't think I need to talk about it. It's such an issue that the Basel Committee actually has issued a regulation, the BCBS 239, mandating certain controls around data quality. Enough examples if you go and search the internet on fat fingers, spreadsheet errors. One of the global banks recently lost about $50 million. It was last month due to a fat finger error. You also have data risks related to AI. Artificial intelligence learns its rules from data. Your data may be accurate, but they may not represent the real world correctly, appropriately. That could lead to unjust bias. You got to watch out for data suitability risks if you're using AI. You also need to be aware of ethical aspects of using data. It is not enough to look at regulations and laws. If you're a global organization, like most people on this call are likely to be, or at least regional, not all jurisdictions would, for example, have the same level of privacy legislation that a GDPR is. Does that mean you can use data without consent in some jurisdictions? That's really a question for you to answer from an ethical perspective. And finally, you're not going to get rich data sets and be able to generate them on your own. You're going to procure data sets from third parties. You're going to have data aggregators, data providers selling you data. How do you ensure that they have obtained consent? How do you ensure that you know the data is accurate, you know where it's coming from? So you need to have those clauses built into your um, third-party management. So it's not all negative. Data can derive a lot of value, as we saw in the previous slide. There are risks associated with using data that you need to manage. So what's the way forward? Like I said, there's going to be an explosion in the breadth and depth of data that you're going to get. New tables, new columns, more rows, new data types that you've not yet imagined, not just videos and text and so on. It is going to be impossible for us to manage these things manually. We are already struggling as a species to manage the amount of data that we are getting. categorizing it, classifying it, tagging it, validating it, assuring it, it's going to be a nightmare. You have to use AI. And that's a bit circular because AI has its own data risks. So I would say there's a two-step approach. One is you need to have a holistic data management framework as part of your risk management. You cannot operate in silos. You cannot say, this chap is looking at data privacy, that lady is looking at data quality. No, it's got to be holistic. Secondly, you need extreme automation. You need to automate the heck out of data governance with human oversight in order to ensure you're using data safely to derive value. Remember, you're only as good as your data. If your data is not right, you're not going to be able to survive in this journey. So, with that, I leave you and join the panel discussion that's coming up next. See you there, folks. Thank you very much.
That was fast yet great, Vijay. Thank you very much. And now let's move on to the next session and see you guys there.